Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 29th of December. We are quite bullish. During pre-market, we got the initial jobless claims and continuous jobless claims that we are going to review in a few secs. But real quick, look at these charts. Initial move at 8:30, 1 hour before market opens. We moved higher. We got this pivot at pre-market from yesterday at 10,890, and we consolidated right there. And look at this, the point of control, this beautiful support that we tested low, the pivot. Remember, sometimes they open just sell off, they grab liquidity, big banks, hedge funds, they grab liquidity and they move the market higher. And look at this, we broke the pre-market pivot. We broke this daily that we can take a look. This daily is the one from 10,920 since the last 10th of November and CPI, and then we got the latest CPI. So this is CPI. This is one of the big daily pivots that we have, along with this one and this one. And we broke this one, and that really moved the market up. Look at this consolidation up here, and then another move up until 11,000. I was targeting 11,000 in my long up here after this pre-market pivot. So quite a big move. And I took off the 11,000 move up here, around here, I think. It was here. I think it was in the second one. I wanted a little bit higher. But right now, it's obviously we are at the 45 EMA. We are doing lower lows. But that doesn't mean that we are not still bullish. We are 2.33% of the day on the day right now on the Nasdaq, and the S&P is 1.56. So that doesn't mean that we are going to reverse. Today is a very good day for the bulls. Why? Well, we got the initial jobless claims, as I was saying. Initial jobless claims came out at 225. We were expecting exactly like that and higher than the previous one. So Wall Street was expecting higher initial jobless claims, but also continuing jobless claims. Initial jobless claims is the people that started claiming jobless, and continue jobless claims we want also higher. We got 1710 and we were expecting 1686, a little bit higher, but we just destroyed. So a lot of people are starting to continue claiming jobless, and that's a good thing, not for them obviously, but for the Federal Reserve that want labor market to be destroyed, to be smacked and to cool off. So this is good news. And apart from a lot of gasoline, crude oil, refinery, distillate stocks change, this was good news. So I was looking for longs, and I hope you also got some of the move. Remember, you don't need to take all the move. You just need a couple of big pullbacks that you want to accumulate and maybe sell a little bit higher. So you don't need to catch the whole move, just partially. This move or this move, both breaking pivots, are quite nice. So what else is extremely high today? Tesla is 7.90% on the day, gapping up since after hours yesterday and pre-market. Look at this. It was about time for Tesla to do some kind of move, so this kind of moves. So I think if you check the volume, look at this volume. Look at this increasing volume as Tesla is selling off. This means that a lot of people is interested, either short or long. But let me tell you, do you think this is a good short right now? Or do you prefer to buy Tesla for the long term? Because right now, Tesla is giving you the opportunity to have 65% ROI until these two breaks, or if you hold for the long term, 157%. So, I mean, I'm personally buying Tesla right here, but I think a lot of people look at this volume. 221 million shares of Tesla. We didn't get this much volume since December 20. So I think a lot of people is watching Tesla. So what else is reaping? Apple 3%, Microsoft 2.26%, Amazon consumer discretionary also 2.36%, Google, everything is green across the board, and also VIX is red. VIX is starting to go sideways at this 20 low level, and this is good. We don't want VIX to break this pivot, and we don't want either VIX to be down here. We just want it in the middle. Let's talk about XLY, consumer discretionary. So what are the sector funds doing? Everything is red, everything is green, but you want exactly these sector funds to be green in order for the overall market to push higher. You want XLK technology along with semiconductors that are also pushing higher, as you can see. XLY consumer discretionary, that's really good, 2.59%, and the ratio with consumer staples XLP is quite in the positive, 2.12% on the ratio. And financials, if people are worried, investors are worried in the short term about the economy, having financials in the green is also good. Also, utilities, staples, and healthcare, these three are defensive sectors. They are in the green, but they are not as green as the other sectors that are positive and are risk on assets. So what else? Crude oil. This is perfect because crude oil is also pulling back, -1%, and natural gas is just consolidating down here around $5. Look at this. So let's focus on this pivot. We are at this level trying to hold, but I don't know about you guys, but below this 5 level, it's just empty space until perhaps, I think, this level, 3.6. I wish natural gas was at that price level. And last, dollar. Dollar is just going sideways. We are waiting for the end of the year, and a lot of people is not in cash, are not trading dollar. And based on Japan, Bank of Japan, and all other pairs of forex currencies exchanges are moving, I don't think dollar is not a big trade anymore. So be careful with that. We might see more weakness on the dollar in 2023. Finally, yields. The 2-year is just a little bit green. The 10-year is red, and let's check the terminal rates for next year. Still 4.8 in April and in September, and 4.6 in December. So remember, we are waiting for the spike until 4.8 until April, in April until September, and in December we have 1 or 2 interest rate cuts to end the year 2023 with 4.6%. So this is what is coming. People have no idea that rates are going to be super high, almost 5% during 6 to 9 months of 2023 until the end of the year, in which I think Fed will start cutting interest rates to support the economy. So that's all from my side, a quick update, very green across the board. I'm super happy that right now we are bullish and we are getting economic data that is supporting what Fed wants. We don't want to destroy the economy, we just want to correct slightly several key sectors of the economy by raising interest rates, but at the same time trying to not smash down and to break the economy. And right now people is saying that maybe we are going too much on the interest rates, but I think it's a good way that we are holding these levels until we see numbers, facts. And right now, today is a good day for economic data, for labor market to start cooling down. So look at this. I have this 11,051 in this This is from Tuesday. I had this level drawn and it was quite a good level. I don't think we are going to push 11,100. That would be insane. But I think it can be the beginning of a nice rally if we start seeing these. Let me grab this ABCD. I think we can start going like this until last week high at 11,400. But this level around 11,600, this big level, I think is going to be quite tough to reclaim all these weeks that we broke on the CPI. In order to reclaim them, we are going to need more economic data, not only labor market. We need another CPI, perhaps another interest rate hike or something like that, or even interest rate cut. So be patient, because the end of the year is approaching, but that doesn't mean we don't have opportunities. Today was a good opportunity for bulls, and I hope you had a good day today. But remember, next year is going to be awesome. You have to be up to date to news, up to date to Fed, interest rates, and all sectors of the economy. You can do it in this channel. I'm going to cover everything next year. So stay tuned to this channel. And as always, thank you for your time. If you have any questions, don't hesitate to comment down below. If you found this video useful, please remember to click the like button and subscribe to the channel. I need your help to grow. I'm putting a lot of effort and I'm providing you a lot of information, so please support the channel. I'm very grateful. I appreciate your time. I hope you have an amazing trading day. Remember that I upload every single day videos for market forecasts, market updates, and market recaps. And also remember that discipline and risk management are key for success. Even though we are super bullish, you always have to take into consideration risk management and position size. So stay safe, everyone, and see you later.